Happy Easter, everybody. Today's date is 4/11/2020. Dow Jones daily chart. Here we are. We had the Federal Reserve come out on Friday with another humongous round of stimulation, and we gapped right up here into the highs. We've had a 50% retracement off of the bottom. It is a bear market rally. They've thrown stimulus after stimulus. We have earnings season coming. This particular bar right here is going to be the major wall of resistance moving forward. We are at the top end of the range in a bear market rally that occurred. And when we were buying the bottoms back over here on March 23rd, and then we gapped up and we continued, we faded back, we tested part of the original bottom. Then we had all the stimulus packages and all of the aid going out to the public coming in. We had a lot of high frequency quant systems, algorithms working electronically in the exchanges. Since the floors are closed, everything's electronic. This is a major doji. This is that gap with the Federal Reserve. Options expiration Friday. Wall of resistance. We've had a 50% retracement off of the lows. Not only that, there are some other things to talk about. One of the things that I will say is that let's be clear about some key moving averages, like the 100-day simple moving average that's still crossing over the 200-day moving average. Let it be known. And so some of that technical damage that I'm talking about still there. And it is a typical bear market rally off of that 23.5. That's a little over. We hit the intraday high on the S&P and the Dow and whatnot. So I can say from the way that bear markets have worked and the amount of stimulus that the Fed has put into the system is that all the good news right now with the earnings upon us, markets are going to have a very hard time. And, with them opening the economy and over the top over the weekend and everything that's going on, it's happy Easter to everybody once again, is that we're at the upper end of this major resistance channel. And they broke above it intraday on Friday, and then it started to come down. This is referred to as a doji, which we're at the top end. Is it possible for the Dow to go up a little bit further and test right into the half bar on an intraday? But the wall of resistance, once again, this is where that last big gap down, we came right up and we filled this thing in right over here. So this is the part that we really want to focus on. I can also take this last part. This is that gap open up. You can see that diamond right there. Okay, this was Thursday's close. This was that gap with the Federal Reserve coming out, throwing more and more and more and more stimulus and more stimulus and more stimulus. So no one's out to fight the Fed, but you're at the upper end of the channel resistance. Quarterly earnings are going to be horrible, and they are. And the thing about it is, bear market volatility, if you go back to the last 10 of them like we've been involved in, you just never know exactly how far that retracement is really going to go. But we can see here with that gap, with the doji, with that news, and we got lots of headlines. People want to open the economy, this and that. I'm sorry, human behavior is not going to run around and start wanting to get on airplanes, and people are going to, restaurants and even in the hotels and traveling. That's not going to return right away, and this has all got to be addressed starting next week, the week after, and the week after that with quarterly earning. Stocks do have to come down in value because they're overpriced. relative to where the value will be going as we move forward into the earnings season and the cycle. And we're at the high end of the cycle of the Dow. And when we look at defining resistance and where things would have to have a retracement, on this one here, the Dow having a good retracement back to right around 22,500 would be really super healthy. And then it wants to set up. But we're going to have a lot of challenges. It's great that we want to get everything back to what we called normal. But the thing about it is, corporate of America and the earnings cycle is a whole nother story. Look, one thing the Fed can't do is they can do what they had to do, created a stop the depression. However, you can't buy your way out of the earnings cycle. So for investors watching the video and traders, one thing about volatility, bear market volatility and bear market, making a market, particularly in the equity side, but in the option pit is another whole thing and whatnot. So people that didn't get a chance to sell yet should probably think about doing that, because no matter what, equity prices, depending on the sector or group of sectors, are still going to have to deal with a long period of time of lower growth. No one's going to stop that. And consumer spending, consumer behavior, the way that they mingled before this virus breakout, people are going to be much more leery for their life. Just because people can start to go back to work doesn't mean the virus isn't out there still circulating, people. So listen, and all of this happened during the most holy week of the year, Easter Sunday, tomorrow. Happy Easter to everyone and to the well-being for everyone. But there's a cautionary period that must be addressed. And the address part of it is the sustainability. Listen, the sustainability of where we're currently at is that we had to make adjustments to forward-looking economic cycles that are going to have a major impact for a period of time. And you can try to forgive a quarter, or you can try to do this, and you can try to do that. But you still have to look at where the current valuation or the current prices are relative to what that lower growth cycle pattern will be moving forward outside of the virus. And then, most importantly is the consumer. What will the consumer do moving forward? We already pretty much know they're going to change. And restaurant capacity and those kinds of stocks in that sector, they're overpriced off of the bottoms. People are going to have to still practice that social distancing of 6 feet, at least. So the capacity level of restaurants are going to run about at 30% capacity level. When you take the size of the restaurant, and whatever the case is that people, when they do go out, if they do want to go into a restaurant, they're going to have these safety precautions moving forward. They're going to need a lot more testing in the United States. They're going to have to be able to lock that down. Hopefully this thing doesn't get out of control. The virus is still here. It's real. It's killed more people. You can call the peak of it. We can call it whatever you would like to say as where the numbers are over the weekend. Yes, it's nice to hear that less people are getting sick, but we're still early into this thing. And to say that, hey, the transmission in society is totally going to be halted or whatnot, I don't think we know enough about it. And the thing about it is, it comes down to the consumer behavior moving forward. And this earnings cycle, yes, there can be a comeback down the road, but that isn't currently right now in this horrific bear market volatility that markets have had to face with. And we're at the upper end of the resistance level. That's why I'm pointing out the 3-day consolidation. 1, 2, 3, 4. So this is a 5-day. This is that gap. They gapped it. They sold it all right back on the gap on Wednesday. Thursday, it was coming right back down. There was more intervention and more releases by the government and whatnot. And then the gap up on that news and more stimulus created this gap on Friday, which went right into the top of the channel resistance area at the current level that I'm showing on the Dow. And that bear market rallies happen this way, and that the upper end of this area where my pointer is the real key resistance. Just so everybody knows, on the Dow as we're moving in to next week and the week after. And then, for the people that really do have to look at the quality of earnings moving over the next calendar 30 days is going to be the real key. And jobless claims, how fast people can get their money, rate of transmission is still going to be out there. So proceed with your lives with a very high degree of caution when you do go back out into society from stay at home. All traders, all people, anyone watching the video, I would say that that's the right thing. Daily doji on the Dow, upper end of the trend channel, right into resistance. We've had Fed intervention. This is what caused the bear market rally. The last 10 bear markets, all of them have had a 50% retracement off of the low and or a 20% rally, but none of them had ever worked or panned out, and they didn't. Beware. Happy Easter. This is the Dow update. Earnings season's upon us. Upper end of the trend channel at resistance. We're due for a pullback. Test these moving averages and getting ready for what we have to face moving forward.